welcome to the June 2022 monthly market update. My name is Ryan Flanders, and I'm the Flanders Group's Chief Investment Officer. May was another roller coaster month in the markets, with a large sell-off followed by a larger recovery, which saw markets stabilize in the second half of the month. And both the Dow Jones and the S&P 500 ended up with small gains, while the Nasdaq's loss was relatively small after bouncing off of the mid-month lows. International markets were slightly more positive than here domestically, and fixed income also showed gains. After a gloomy start to the year, it was nice to see some green, even if the gains were limited. And just like April and most of the first half of 2022, the primary driver here was interest rates. But unlike prior months, the news was good, as they showed signs of stabilizing. And though the Fed raised rates last month, as expected, and inflation was still elevated, in both cases, we've seen evidence that market concerns have outpaced the actual data. And inflation may have showed signs of peaking, but we'll get a better gauge of that here in early June. And concerns about the Fed's expected rate increases started to tick down. Beyond interest rates, other concerns also showed signs of steadying. Although COVID cases rose here in the U.S., unlike in prior years, both spending and growth continued to be strong. And while mass COVID lockdowns remained in place in China, supply chain disruptions haven't immediately emerged yet. Similarly, while the war in Ukraine continues too, it has shifted into a lingering risk rather than an immediate one. So while risks remained in May, the perception of those risks moderated slightly, and that certainly helped to alleviate the markets. Also helping to support the markets, the economic news remained positive. Hiring remained strong, supporting spending growth. Looking forward, though, will that continue? There are real signs of softening, especially in the consumer and the housing sectors, as higher prices have hit both earning and spending power. And while consumer confidence remains outside the risk zone, it continues to trend down. The risks to the economy are increasing, but as rates continue to stabilize, so will the economy. And as inflation moderates, real wages will recover, especially as the labor market remains strong. On the whole, while growth is slowing, we see little or no direct fundamental damage in the data yet. And as we've talked about in 2018 and 2019, slowing is still growing. In other words, while real risks remain, as far as the economy is concerned, we are still growing. Pullback in interest rate concerns coupled with still strong economic backdrop explains much of what happened in May. As inflation continues to slow and the Fed begins to moderate its policy tightening, and as the economy keeps growing, markets are stabilizing at lower valuations. And once that base is rebuilt, they can then move higher again on rising earnings. It's certainly been a painful start to 2022, and the pain may not be over yet. But as uncomfortable as this has been, it's setting the stage for future growth, and we're now well into that process. Once again, that's not to say we're done with the market turbulence. Interest rates can and probably will continue higher. The war in Ukraine could expand. But despite the headlines, over time, the fundamentals are what drives our economy and the markets. And while we're feeling the pain as we return monetary policy back to normal, the worries are starting to subside to something much more realistic. And that's the bottom line here. Lots of bad things could happen, but most haven't and most won't. And the markets have moved from panicking about what might happen to now reflecting what's likely to happen. And we're starting to see more stability as a result. The risks are real, but despite those risks, the fundamentals are still sound. And while we've seen substantial volatility, and we may see more, this provides a good foundation as we move forward. That's it for this update. Thanks for watching. Join me in July for the next one. And until then, please feel free to reach out to our office with any thoughts or questions that you may have. Thank you.